And next up is Nampak, which is a old established South African giant. It's involved with metal, that's cans, glass, that's the beer bottles and other things, paper and plastics. It's operational across the Southern African region, and it's got big businesses in Nigeria and in Angola as well. 11.5 billion rands worth of market cap, price to earnings ratio 15.63, dividend yield 5.44%. But the share chart does not look great.
No,
we'll put it up while we're talking.
Yeah, so this one was doing really well. I think it was quite aggressive in moving into getting exposure to packaging in Africa.
Yeah.
Major operations in Angola and Nigeria, Zambia as well. And really at some point, foreign fund managers thought this was a way to play growing consumer demand in Africa.
Which was hot because commodity prices were strong and those countries were benefiting.
Yes, and so the share price reflected that. And initially, great results out of Angola.
Yeah.
Nigeria, they sort of bought quite expensively a can line there, and that was just before the oil price reversed, and that has been a very difficult situation for them.
Yeah. But what now? I mean, Andre de Ruyter, the CEO, came from Sasol. He seems like a solid guy. The mixed picture there starts to emerge. Angola looking quite okay, like rebounding a bit.
Yes.
Here locally, though, there's a bit of a battle too. So they had a difficult renegotiation with SAB Miller around the beer bottles, and then they've had some of their customers have just not been ordering the quantity of cans, tins, things that they've needed.
Exactly. So this is very much dependent on end consumer demand, and we've seen the South African consumer under pressure. And really, if you look at the retail numbers, volumes have been down generally across the board. Obviously more so in discretionary, but food as well, really volumes down. So that means less cans, less plastic, etc. Yeah, paper packaging. So it's really been quite depressed, and that's reflected in the outlook statement.
But that's looks as though it might be beginning to turn a bit.
No,
inflation's low, next move down.
Yeah, I think people are a bit more positive. If you saw there, they gave a 5-month update to the end of February.
Yeah.
They were quite downbeat on end consumer demand, in fact.
But there was a little bit of an extra issue here with them, and that is that some of the funding arrangements, some of the debt levels got dangerously high because of the downturn. And I'm not sure if it related to the international deals so much, but there were issues
so what's
there.
happened is they've got a lot of trapped currency, both in Angola and Nigeria. At the last count, they said 2.2 billion rand. So this is money that they'd like to repatriate from those countries, but because of the currency controls that have been implemented there, they're unable to repatriate.
That doesn't sound good.
No, and what they've been able to do is hedge some of it in terms of the currency exposure, because there's a big difference between what they call the official rate, say for the Kwanza in Angola, and what is really the black market rate in terms of money that's moving freely in and out of that country. So they potentially could see further write-downs on that cash, on the unhedged portion. So that's also of concern.
Which explains why the share price has gone downwards. So from your perspective now, would you buy them?
I think they've still got some tough times ahead. I think they do have to take the knock on the currency, because the Kwanza, it's sort of at least 50% lower than the official rate. And at some point, I think the government has to see reality. The oil price is struggling to actually recover beyond that $50 a barrel mark. So this is a tough spot to be in. So no, not hot.
Not hot. Okay, not hot on that one.